So last week was a really big week for credit union advocacy. We had action in the House of Representatives. We had a huge NCUA board meeting where the board approved a 2-year budget. Chairman Matz, as part of the performance overview, indicated that the agency was open to reducing examination frequency, trying to get to an 18-month examination cycle through the implementation of new technologies and also the implementation of the regulatory relief they've been proposing. And of course, the big deal was the proposal on field of membership, where they're trying to take out of regulation requirements that are not required by law. So the other piece of big news coming out of the NCUA board meeting last week was a comment that Chairman Matz made during the discussion of the performance plan. And she indicated that there's a willingness to address examination frequency, and we and others have been pushing the agency to move to an 18-month exam cycle, similar to what the agency did prior to the financial crisis. What Chairman Matz said is that with the implementation of regulatory relief that they've been proposing, so we've got the MBL rule and the field of membership rule and perhaps a supplemental capital rule in the future, as they implement those and as they deploy new technologies, that it could be possible to get to a reduced exam frequency. And that's very positive. We've got to continue to push them and continue to work with them on that in the coming months and the coming years. But we took her comments last Thursday as a very positive indication that they're thinking about this and perhaps willing to go to an 18-month exam cycle. So the field of membership proposal is a really big deal for credit unions. What NCUA is trying to do is to increase consumer access to credit unions. They're doing that by changing some of the definitions that will allow credit unions, whether they're a community charter, a seg-based, or a TIPS charter, to expand the groups that they're serving. So we're real pleased to see the changes that they're making to the definition of well-defined local community, the changes that they're making that will allow credit unions in small states to serve entire congressional districts, and the changes to the TIP charter. All very positive moves on the part of the agency. What this is going to mean for credit union advocacy in 2016 is that field of membership is going to be at the top of our list. So we're going to start with a very aggressive campaign to get credit unions to comment on the proposal, but we know that this is an issue that we're going to need to talk to Congress about. The banks oppose this. They sent a letter of opposition that even before the proposal was released. So we know that we're going to need to work with members of Congress to help them understand how this proposal will help credit unions better serve consumers and small businesses, and why it is fully consistent with the Federal Credit Union Act. So next week Congress comes back, and there'll be about 10 or 12 legislative days before the end of session. There are 2 big deadlines that we're paying attention to. December 4th, funding for the Highway Trust Fund bill expires, and December 11th, funding for the federal government expires. Now, that's both of those, you're like, why is that important to credit unions? The Highway bill is important to credit unions because the House-passed version of the legislation has 2 provisions in it that would reduce regulatory burden for credit unions. One provision would modernize privacy notices, and the other provision would permit privately insured credit unions to join the federal home loan bank system. There's a conference committee that has convened. They met a few times last week. Staff is meeting during this Thanksgiving Day period, and they're resolving the differences between the House and the Senate versions of this bill. We hope and we expect that our 2 provisions will survive the conference committee. We're not really going to know until they deliver their report, and we expect that next week, so we're paying close attention to that. The other deadline is the December 11th funding of the federal government. This is important to us because in both the House and the Senate financial services and general government appropriations bills, there are additional provisions to reduce regulatory burden for credit unions. Our strategy the whole year has been to get as many provisions through the House Financial Services Committee the House of Representatives and the Senate Banking Committee as we can to ripen them so that they could be a part of these end-of-the-year packages. So members of the appropriations committees, both in the House and the Senate, have been meeting to put together an omnibus appropriations bill. We're very hopeful that that will include additional regulatory relief provisions. So we're looking at a 2 or 3 week period of time once Congress comes back after Thanksgiving where we could see a number of credit union provisions move through the chamber, perhaps become law. As we pause this week to celebrate Thanksgiving and reflect on all we're grateful for, I just wanted to say thank you to everyone who's involved in credit union advocacy. We have experienced so much progress this year in advancing the operating environment for credit unions. We've seen positive field of membership regulation, MBL regulation. We've stopped banker attacks on our tax status in several states. There's been so much that has been accomplished, and it's more than just the folks that are working here at CUNA to do it. With our league partners and the thousands of credit union advocates we have across the country, we're helping to make it a more positive operating environment for credit unions. So to everyone out there that's a part of that, thank you so much. Happy Thanksgiving and have a safe holiday.